You want to know. What are the best stocks to buy now? I've got 7 stocks to buy right now, according to Seeking Alpha. Let's go. The trade desk, ticker TTD, topped out at $141.53. That was a 52-week high. The 52-week low was 76.12, and that goes back to early 2024. So it's down over 36% in the past month after its recent earnings report. Now, the earnings weren't terrible. The problem is that trade desk had 33 consecutive beats, and this had a miss. Not only on the revenue, which missed by 18.55 million, but also the guidance. So you can see the growth is decent here at 22.3%, and we did have a beat on non-GAAP EPS, 59 cents, that beat by 2 cents. So not a perfect quarter from a company that always seems to deliver. Revenue is decelerating, an earnings miss on revenue and guidance, and the stock was just really expensive. Now you want to know, is trade desk stock a buy right here and right now? I'm going to give you the bull case and the bear case as well as my thesis. So first, the bull case. Strong business fundamentals. Now, free cash flow margins very strong. Trade desk has actually been profitable for a while, and this is posted in our Discord, but you can see $1.9 billion of cash and cash equivalents. And then if you add the free cash flow from the quarter, you end up with about $2.1 billion in cash. The trade desk also has no debt, and it issued another $1 billion for the stock repurchase plan. Market position. Trade desk is well positioned in the digital advertising space, particularly with the growth of connected TV or CTV. Also retail media and that shift to what's called programmatic advertising. Growth opportunity. Significant opportunity for expansion in markets like CTV. Adoption really is in early stages. Also in international markets where programmatic advertising is less mature. In fact, 2/3 of global ad spend is outside of North America. So lots of room for growth here. And of course, that post-earnings valuation drop. It's much more attractive at that $75 level. That current forward PE ratio and growth-adjusted PEG ratio suggests that the stock might be undervalued, especially if long-term prospects are realized. Now, we can also look at those cloud SaaS metrics for TTD. The EV/NTM revenue is 13.5x, and that Rule of 40 score is a 48%, which is solid. And lastly, innovations and partnerships. The trade desk continuously innovates and has strategic partnerships with major platforms, which can enhance its advertising inventory and platform value, positioning it very well for future growth. The bear case. High valuation concerns. Even though the stock's come down quite a bit, it's still expensive. Execution risks. Recent guidance from management was below consensus expectations. There's concerns about slower growth, weaker than expected guidance, potential margin pressures. This might indicate underlying issues or temporary missteps in execution. Now, this was addressed in the earnings call, and that's really what's going on here. On the earnings call, the CEO, Jeff Green, attributed the miss to small execution errors during a period of significant strategic transitions. He noted that while macro conditions like election-related advertising and GDP pressure influence some factors, the primary issue is internal execution missteps. And a reminder that volatility is not new to this stock. Back in Q3 of 2023, the stock dropped 28% after hours. Market saturation and competition. There's skepticism about whether TTD can maintain its growth rate in the face of increasing competition from other digital advertising giants like Amazon. You also hear about AppLovin, and potential saturation in certain segments. Economic sensitivity. This really is a cyclical stock. Advertising budgets are often among the first to be cut in downturns. When you get to a bear market, this stock will get crushed. And of course, dependence on digital trends. The bull case heavily relies on the continued shift towards digital and programmatic advertising. For each stock today, we'll look at a chart. This is the trade desk TTD. In orange, that's a previous chart day. We do that every single Wednesday in Patreon Discord. I told the gang that at $140, it was really tough to chase the stock and really a trim level. We talk a lot about not chasing these air pockets, no FOMO. You can see up here the stock is above all the moving averages and this red trend line. Now the stock is below the red trend line. You can see it's $79.42. The low for today was $77.61. And of course, the stock can always go lower. You could see it in the 60s, but I like it here under $80 a share, preferably even 75 or less, DCA as a long-term investment. Last week, we covered AMD on the channel, about 5 minutes of analysis. If you haven't seen that, when this video is over, go check that one out. So we just experienced a 52-week low for AMD at $106.50. It has bounced off of that. It's about $114 a share now. Now, back when the stock was $225, we were saying it's probably $100 to $105 and definitely trim it over $200. I still think it's attractive here. I prefer it that 110 or less, or even $100 to $105, which might not happen. But I think if you're accumulating shares at $115 or less on AMD long term, thinking 2 years out, you're going to be happy with those returns. Now, even without this news, Taiwan Semiconductor and Broadcom consider possible Intel deal. I'm not sure if this is going to happen or not, and it doesn't really matter. Either way, Taiwan Semiconductor has a true monopoly. 90% of the advanced chips come out of Taiwan, and Taiwan Semiconductor really creates all the advanced chips for all the companies you can think of, from Nvidia, AMD, Tesla, Apple, and more. This is a true pick and shovel play, not only for AI and data center, but really for every secular growth trend that we talk about on this channel. The profitability grade is an A+ on Seeking Alpha. The growth is also solid A-, and you have a 25% forward revenue growth. Valuation, well, this is where it gets tricky in this bull market. The forward gap PE is a 22.39, which isn't crazy expensive, but it is expensive to the sector and perhaps historical metrics. But looking at the PEG ratios, they're very attractive under 1. It also pays a 1.21% dividend. Market cap, $858 billion. We told you 2023 that this was going to be one of those next trillion-dollar companies. It's just a matter of time. Now, it is up about 57% in the past year. Year to date, only 2.64%. This is another one of those stocks where when it was $225, we said, hey, it's a little expensive here. Just wait for a pullback. And you can see it got down to $187. This was on the DeepSeek sell-off. There were some good opportunities then. So it is about $15 more expensive today versus the end of January. I want you to keep an eye on TSM, and when it comes below $200 a share, that's the area where I want a dollar cost average as a long-term investment. Now, I've got 4 more stock picks, but if videos like this are helpful to you, make sure you subscribe to the channel and smash that bell for notifications. And if this video is helpful to you, please return the favor, drop me a like, and drop me a comment. Let me know what you're buying right now. Credo Technology Group is all about data infrastructure. This is another data center play. Now, we've talked about this on the channel, so I'm going to jump right into the financials and the chart. You can see it's up a whopping 6.58% today. I was hoping to get it under $70 for you guys, but let's just look at some of the metrics here. It is up 1 year, 235%. It's $11.8 billion market cap. It does have 4.16% short interest. So this is a growing company, and it could use some work in the profitability metrics. The growth is A+. It's phenomenal. 50% forward revenue growth. Valuation, it's expensive. The forward gap PE is a 399. Again, this is stocks to buy according to Seeking Alpha, and this was the #1 stock on the screener. This has a forward price to sales of 30, so it's a bit expensive for my taste. I also told you guys that I typically avoid stocks that are headquartered in the Cayman Islands, which is why I've never bought this stock. And the stock is up nicely since the last time we covered it on the channel. So this is a tough one, because if we were doing chart day right now, I would say, hey, you have to be really careful chasing. At the same time, you can see this R3 is up here at $104, and it could get above that level. So it could easily have a $25 upside or more. But keep in mind, back in April of 2023, this was a $7 stock, and it ripped to $86.69, now $75. The 100-day moving average is $56. The 200-day moving average is around $41, $42. And that S3 is below 35. So I would use caution with the stock.
So I think that the announcement today is really game-changing. I'm so happy that you did it, that Snowflake drove this innovation, and I think this is completely game-changing.
Snowflake is back from the dead. Analysts are telling you to buy the stock and upgrading the price targets. Even Seeking Alpha is saying Snowflake is a buy. Now, in both of the growth portfolios, Snowflake is my second largest holding. I've never lost conviction with Snowflake, and I was buying heavily last year in 2024, especially under that 150, 125 level. So I'm very bullish on Snowflake, and I'm going to share a couple of developments here. Now, this is just from February 12th. Your enterprise data needs an agent. Snowflake is expanding its AI capabilities with the public preview of Cortex agents. Now, this is a partnership with Anthropic Claude, state-of-the-art quality unstructured data retrieval accuracy, beating OpenAI embedding models by at least 12%. Snowflake being involved with data agents makes a lot of sense. And last year, analysts were concerned that Snowflake was a little bit behind in AI. Now, of course, you know the whole story replacing the CEO. Now, here's where I think Snowflake could be really big when you think of AI. So a breakthrough that can cut AI inferencing times by more than 50%. Now, we know that AI inference is going to be a huge cost, a huge part of AI once those applications start being delivered to consumers. And Snowflake said that this technique can improve LLM inference throughput by 50%. So reducing costs, this is a big deal. And even up to 75% without running Swift KV. Now, this is not a cheap stock, $192. I've been telling the Discord team to not pay over $150 for a very long time. And it can use some work in the profitability metrics, although it is an A- on Seeking Alpha. That growth is going to be around 30%, which is solid. And remember that this isn't SaaS, this is going to be consumption based. Now, of course, if you're a value investor, you're going to look at something like, well, I don't even have a GAAP PE ratio. This is way too expensive for me. 267 PE non-GAAP forward. Now, of course, we want to use those cloud metrics we talk about on the channel. So that EV NTM revenue for Snowflake is 15.7x. Now, certainly not cheap, but keep in mind that Palantir is a 77x. Cloudflare is a 30x, AppLovin 29x, CrowdStrike 24x, and so on. Now, if you're following the channel, we played this beautifully, and we gave you these exact levels to look to DCA. So you could have been buying this stock below $110, and now it's $192 a share. So that 150 level and lower is where we wanted to target that DCA. The R3 now is $208, but keep in mind, this has to report earnings, and this stock could pop or drop on the news. So earnings are coming up here February 26th, so be very careful with this. I do think that $250 is very possible over the next 12 or 18 months, maybe even higher. But keep in mind, I don't like buying stocks at 192 like this. I'd rather buy them at 125 and so on. You got to do what's best for you and for your blueprint. GitLab, another AI beneficiary. This is going to be SaaS software. This is up 27% year to date at $71.54. We were buying this last year in Discord under $50 DCA. This is going to be in the DevSecOps category. So it helps developers and organizations securely manage their IT infrastructure. AI can play a role in GitLab a number of ways. So they have GitLab Duo. It's a suite of AI features that assist developers. Essentially, this will help you build AI cheaper and faster. And this could attract more interest in using GitLab as it increases its potential utility. So this is an $11 billion market cap. Be careful, it does have some short interest here, 7.57%. And this is going to be another one that's software as a service, recurring revenue, so it's going to be expensive. The EV NTM revenue for GitLab is a 12.3x. And it does have strong net dollar retention, 124%. The NTM rule of 40 is 40%. Now keep in mind, this stock does have earnings on March 3rd. So again, be careful because this could pop or drop. These type of names, if there's a miss, stock can drop 20, 30%. You just saw what happened with Trade Desk. Looking at a chart, the R3 is up here at $86.07. So that is the upside if it continues to have bullish momentum. Although it is above the moving averages, you can see the 50, the 100, and the 200 day. And the S3 is back below $50 at $49 a share. So again, for us, we were buying this stock under $50 DCA. It got down to 40 bucks. It's hard to chase it at $74, but this is listed by Seeking Alpha as a stock to buy now. Number 7, last but not least, Grab Holdings. Now, this stock is up 8% and another 2% after hours today. This is a $21 billion market cap. We were talking about this over the weekend. So I posted this on Discord. It was something I saw on X. When you invest in Grab, you're essentially purchasing $100 million worth of cars and property in Singapore, $5 billion in cash, 40 million customers, Uber in 7 countries, Shopify in 7 countries, PayPal in 7 countries, and Instacart in 7 countries. And I said it was interesting. Anybody own it? I covered it 5 years ago on the channel. And you can see on Seeking Alpha 2 recent articles here, strong buy. Profitability is an A. That gross profit margin TTM is about 41.62%. Growth is strong, A+, 33% forward revenue growth. Valuation gets a little bit tricky. It's not profitable. So if you look at a price to sales, 7.23. A forward EV to EBITDA is a 43.55. And forward price to book is about a 3.02. This is an expensive stock. stock in my eyes. Now, with that said, it does have momentum and a lot of people are piling into the name, so it could go higher. This was a $2 stock back in November of 2022, and it really was a penny stock until August of 2024. It ripped from $2.98 up to $5.72. So with this move, it could retest that $5.72. This R3 is $5.82. You could see $6 a share, but you're above the 50, the 100, and the 200. And we talk about what? We talk about avoiding those air gaps. And this does have a significant air gap, so buy at your own risk. If you're new to the channel and haven't subscribed, make sure you subscribe and smash that bell to get notifications so you don't miss the next video. And if this video is helpful, please return the favor, drop a like, drop a comment. Have a great rest of your day. Take care.